Okay, IPOs, and that is what we are talking about. So let me bring on board Pankaj Tibrewal, Senior VP and Fund Manager Equity at Kotak Mutual Fund, joining in on the show right now. Pankaj, hi, good morning. A slew of new paper hitting the primary markets. Just wanted to get your sense on how you're mapping the subscription levels and whether you're seeing a good amount of appetite for any of these new issuances.
Yeah, good morning. In terms of IPO, we have seen a very strong issuance pipeline. And over the last few months, we have seen many new businesses also getting listed, which were probably not available to investors in the past. However, if you look at the data, there are some interesting facts which emerge. We analyzed the data right from 2004, and about 480 IPOs have been done, raising almost about 3.8 lakh crores. And this is, we are considering IPOs above 50 crores on offer size. Interesting to note is that 74% of them have underperformed Nifty, and almost 50% plus are trading below their listing price. Another important and very surprising fact is that only 8% of the entire IPOs since 2001 have been more than 5 baggers, and 75% of them were listed in 2010. So when you look at the past data, you need to be aware of the fact that there will always be IPO frenzy. All investors need to choose the businesses, the management and valuation very carefully and not get carried away by the listing gain in the short term, but look at investment more from a medium to long-term perspective. There will be opportunities which will come along our way over the next 2-3 years as new age businesses get listed, as many platform businesses which are in the private domain today will access public markets. But in this IPO frenzy, one needs to be careful in selection of the businesses.
Sure. Pankaj, is there, any sector or segment towards which people are gravitating? For instance, a Nazara Tech, a brand new offering, first of its kind from the gaming segment, has found a lot of fanfare among investors. A lot of specialty chemicals businesses, for instance, which are also hitting the market right now. Are you sensing any gravitas towards a particular sector as opposed to the other?
It's a very interesting question. So if you look at some of the new age businesses which were not available to investors in India are starting to get listed. For example, the platform businesses or the gaming businesses or the new age digital technology businesses. In the past, we have seen that India was mainly the legacy-led IT services businesses which dominated the IT sector. But going forward, our thought is that many of the unicorns, and Credit Suisse recently came up with a very interesting report where 100 unicorns are roughly valued in the private market at about $260 billion. And some of them over the next few years will look for listing out in their Indian bourses. So I think that's a new theme which is getting a lot of positive response from the investors, because we have seen the success of many of the platform businesses in the West and how they have created huge market caps. But again, I would caution that one needs to evaluate every business separately, look at the valuation which they are coming at, and look at the future runway for growth.
Sure. Also, what continues, Pankaj, to dictate what finds more appetite in terms of new issuances? Is it pricing of the IPO? Is the company itself? I know all of these dynamics do play a role, but largely, what do investors actually go by?
So I think the basic principles of investing doesn't change, whether you invest in an IPO company or whether you invest in a secondary market company, which is already having a long-term track record. The few things which we look at as institutional investors is first the business. what is the right to win for that business over the longer periods of time, and whether the business, from a sustainability perspective, can generate return on capital which is higher than the cost of equity, and can sustain that for long periods of time. The second is the ability of the business to plow back the cash flows back into the business at higher rate of returns. And if they can do that, that becomes a compounding machine. The second is obviously the management. We believe that in IPO, that's something which is not tested, because the past track record of the promoters probably may not be out there in open compared to a listed company which is already there for last many years. So I think management evaluation is slightly subjective, but we try to bring some art and science to it by speaking to the ecosystem, by speaking to the competition, vendors, suppliers, ex-employees, and the current employees if possible. The third is obviously the price you pay for that growth, which is probably the company is offering. One should be aware that they are not paying too much and doesn't get carried away by the frenzy at the current marketplace. So I think valuation also is very, very important to make sure that you make returns over longer periods of time. So I think the business management valuation, which are basic principles of investing, goes in IPO investing as well. What we do it for the secondary market stocks.
Sure. Pankaj, great to have you on the show then and get an insight of how the primary market issuances are getting absorbed. Good speaking with you as always.